Hey everyone, so after a pretty long time, probably after few months, I'm covering another company. So I've chosen MPS Limited. So we'll talk about why this company kind of came into my radar. Also, we'll look at the fundamentals of the company, we'll look at what exactly the company does and how it is going to benefit in the future, and also we'll look at the technicals of this particular company, right? So MPS is a B2B learning. So before going into the details, this was a subsidiary of Macmillan. So Macmillan, most of us know, they were into publishing books, textbooks and stuff like that, right? So it got demerged from that, and now ADI BPO service, they kind of bought the stake from Macmillan and they own 80, it's almost 68% of this particular company. Okay, so this is into B2B learning and platform solutions, right? So the company kind of helps corporates and educational people and also scientific community, right? So recently, because of the digital consumption and the recent advances in AI and ML, right? That is artificial intelligence and machine learning. So that recent acquisition they did in North America, right? That is into AI. So we'll talk about that also. So the company is mostly into publishing digital this thing and also into e-learning, right? So if you look at the business segments, there are three major segments. So the content solution, it kind of provides 53% of the revenue, and then comes platform solution. So the content solution is more like a service that they do. Platform service is more like a product that they kind of offer to these corporates, right? And then comes the e-learning, which is also a service, right? So these are the three major ones, the content solution being the major one, right? So then comes the revenue mix. So geographically, if you look at the particular, they are in 15 plus countries, right, at the current moment. So America being their biggest one, around 50% comes from North America, right? And then the second largest is Europe, and then the Middle East, India, and APAC, right? So as of now, they have around 700 plus customers. So 100 plus customers from the Fortune 500 companies they have, right? So some of the biggest ones would be Apple, Amazon, Shell, PepsiCo, and etc., right? So if you look at the past acquisitions, the company has acquired almost 10 companies in the last 10 years. So in the content solutions, they have acquired LLC, EPS, TSI Evolve, and the latest one, AJE LLC, which is kind of into artificial intelligence also. They have acquired. This was like a 2 month ago acquisition, right? And in the platform solutions, they have three of them which they have acquired. And in the e-learning thing, in 2023, they kind of acquired Liberate Group, which is from Australia, right? So they have now moved into Australia and New Zealand as well with this acquisition, right? So they have been continuously acquiring. Most of these acquisitions are from their internal accruals, right? So they're not taking in debt to kind of buy these companies, because it's a asset light company. So when I say asset light, they need not build factories and things like that. Whatever profits they're generating, with that profit they are kind of growing organically and buying out more companies, smaller companies, which will help in improving their top line as well as their bottom line, right? So the management is actually very good. So back in 2012, they kind of acquired MPS from Macmillan itself, right? At that point, that MPS was actually making 120 crores of top line and was a EBITDA negative company. So in 10 years, they kind of turned it around. Now they are kind of making 30% plus EBITDA on that particular in that particular company. And also the recent acquisition that they have done, that kind of gives them a top line of 200 to 250 crores. The EBITDA is in like early to mid teens, but they are very confident that they can turn it around and make it a 30 plus kind of EBITDA in the coming year, right? So even in FY22, they kind of bought back the company shares around 900 rupees. So what the company is doing, let's say if they're unable to find any good acquisitions, they are kind of buying back those shares. So the company is not I mean, the management is very proactive and kind of trying to grow the shareholders' wealth, right? So if they are not finding any acquisitions, they are buying back the company shares. If they are finding acquisitions, they are going out and acquiring. So in this financial year, they have done two of them. One was Liberate Group in Australia, around 40 to 50 crores that was, and the new one, that is AJE LLC, that costed them around 70 crores. Even after that, the company has close to around 100 crores in their books, right? So, and the vision for FY28 is the company targets a revenue of 1500 crores. As of now, the revenue is close to 500 crores, but with the recent acquisition, like the recent one that they did, that close to half of what the revenue that they are doing, right? So if the new company contributes to 250 crores of top line, then naturally their this thing top line will grow from 500 crores to 750 crores. So MPS Limited, if you look at the market cap, it's a small cap company, hardly 2600 crores, right? And also if you like look at the other numbers, so P is not really expensive for some company which is into service and both product, right? Usually product companies, they end up getting a higher multiple eventually. Right now it's a small cap company, people are not giving it so much attention. So if you look at the debt, no debt at all, it's a cash rich company. ROC is very solid, around 33%. The operating profit margins, they have been improving around, so this is for the standalone business, it is around 43, but for the consolidated one, it is around 33%, right? So enterprise value is lower than the market cap. That tells us that they are sitting on almost 53 crores of cash, right? So this is the fundamentals look really good. The higher the ROC, the better the rate of return on the capital employed, right? And they have been employing capital by doing these acquisitions and stuff, right? So next, looking at the growth in the past. So if you look at the growth in the past, continuously the company has been growing, right? The operating profit margin has been also improving, right? It is currently around 33%. This is the consolidated figure that I've taken, right? And the net profit also, if you look at it, it is about 20%. Because it's an asset light company, the net profit is also very high, around 20% plus. So let's assume they do a 1500 crore revenue in 2028 and a net profit margin of, let's say, 25%. Usually that also improves as the company does higher revenue. So that means the company should be easily doing around 350 to 400 crores, right? 25% net profit on the 1600 crore. That means company should be doing this thing of 400 crores in profit. So let's say 3 to 400 crores. Let's say they make around 3 to 400 crores. Even if you give it a 25, so usually what happens, companies have lower valuation when they are small, but as and when people come to know that this is a fundamentally great company and things like that, there is a P re-rating that happens. Let's say the P re-rates to like 440, or let's say even 30. Yeah, in the worst case scenario, it expands to 30. So a 30 multiple on a company making 300 to 400 crores net profit, right? It should be somewhere close to 1200 crores of market cap. That means it can easily become 4-5 times the current size in the coming, let's say, 3 to 4 years, right? Based on the guidance that the company has given and also the kind of acquisition and stuff that they have been doing, right? So if you look at the charts, so the charts currently, it does not look that great. It is kind of into that consolidation phase, right? But with this recent acquisition, the March numbers itself should have a bump up in revenue and net profit because of the recent acquisition, right? Probably around 40 to 50 crores. You can expect a bump up in the top line compared YOY, right? So looking at that, probably after the small consolidation, it can again start its up move. So this was in stage 2. Now it is currently looking like stage 3. Most of the good companies, what happens, they don't have stage 4. So from stage 3 itself, they kind of consolidate and start stage 2 from there itself. So the stage 3 becomes stage 1, that consolidation phase, and from there again they start moving higher. So all in all, a very high quality company doing acquisitions, and the management is very capable of turning things around, right, in the acquisitions that they do. And also, since the world is growing towards digital and e-learning thing, right, looks like they should be able to easily achieve their 1500 crore revenue target. They kind of don't give an exaggerated guidance like most of the companies do, right? They kind of tell you that they are going to achieve so and so, then underperform. So these guys usually under the ambition is much higher, but then they kind of guide it at a much lower this thing so that they can easily achieve whatever guidance that they have given. So looking at all that, looks like a very good company that should grow as India grows and even the world grows into a digital this thing, right? Hopefully this helps. Thank you.